let me record this webinar so that I can upload it to the drive as well.
All right.
Okay, yeah. So we're saying that if we are in a downtrend, and if we break above, then we have invalidated if we break above the previous highs and lows. Okay. So
Yeah.
for the case of a downtrend, we know that after every impulse, we're going to need a liquidation phase before continuing, right?
Yes.
So this liquidation phase, we expect it to go and test the invalidation point. Okay. Now the invalidation point on a downtrend becomes the last lower lows, the last previous lower lows that were broken. Okay.
Mm-hmm.
Yeah. So in the case of a downtrend, this becomes the last previous lower lows, because if we go all the way below this, then we are expecting to do a structural retest. Okay. So if we are looking to enter at the invalidation point, then this is the price level that we are looking. So this becomes the invalidation point. Okay.
Okay.
Yeah. And so for the case, this is very important. Like, this is the basics of all the entries that we take. Okay.
Okay.
Yeah. Now let's look at an inverse scenario for the case of an uptrend. Okay. So if we have an uptrend, okay, to break this uptrend, we have to break these last lows and highs. Okay.
And high, exactly.
Yeah. So if we break below these previous lows and highs, okay, we don't expect a pullback to come and exceed these previous last highs. These last highs now become our invalidation point.
Invalidation, and that's where we enter. Oh.
Yes, exactly. And that is where we enter to take a sell trade. Okay.
Exactly. Sell the limit.
Yeah. So where are we selling to? Essentially, the very first area that we can consider as our take profit would be the level that was invalidated to make this uptrend that we are in. Okay.
Okay.
Yeah. So for the case of this uptrend, it had to come from somewhere. Okay. So that means that we had something like this. Yeah, we had something like that. Okay. Excuse my drawing. So these were the last lows and highs.
Yeah.
Okay. So that means now, similar to this situation, okay, so now this becomes our invalidation point, because this is our last low. I mean, yeah, our last low that was broken in order to make this uptrend. Yeah.
Mm-hmm. Got it.
Yeah. So after rejecting this invalidation point, then we do expect price to eventually come and test this invalidation point. Okay. Although there is in fact a way to know whether we are going to break below it, whether we're going to break or bounce, okay, by looking at the higher time frame. But that is something that is in the next phase, when you get to the advanced phase of highs and lows. But essentially the principle is the same. Okay. So that means that if we break the previous highs and lows on the monthly, that means that we are essentially expecting to go and test as far as the invalidation points. Okay.
All right. So if I understand correctly, right now, let's say GBP USD monthly time frame. If we break, there was the impulse going down.
Yes, this.
Yeah, exactly. But the previous high, the previous low on the monthly was broken, and now if we go break the previous high, I mean, it means that that whole downward movement is invalidated.
Oh, you mean this previous month was broken, right?
Yeah. So there's that. If we look at the
this, is this the one that you're talking about?
The one high. I would have chosen the higher one on the left, the highest point. It's at. Let me check.
You you can annotate actually. So you just look for the annotating option.
Okay.
Yeah, look for the annotating option, and you can annotate. I think if you activate it, you will be able to draw on the charts. Then I think it will be better for you to be able to show me.
That you can see on my screen. It's the high at 1.32.
1.32.
Yeah. So on the left. Yes, that high.
1.32.
So
Oh,
if we break
okay.
that, if the whole trend has shifted, is that correct?
Oh, okay. Well, there is another high here that maybe you may not have noticed because it is small, but it is here. Do you see that? Because we have this bearish candle, then we have a
I
bullish
think
candle.
it.
This bullish candle means that we do have a lower high, then proceeding to a lower low. Like if we are to shift to a line chart, that's when you can see it much more clear, much clearer. Do you see this high? This high here.
The computer lagged.
Oh, it lags. Oh
The
yeah.
computer is.
I think it's the network. We have network issues.
Yeah. So we've broken at 1.27. Is that the one?
Exactly. Yes. So
Oh, okay.
1.27
So
is
that on the smaller time frames, we would see clearer that that's.
that this was in fact a lower high. Okay.
Okay.
Yeah. So
Got it.
we have broken the last lower highs. What does this mean for GBP USD? This means that GBP USD on the monthly, the we are expecting to go and test the invalidation point of this trend. Okay.
Of the downtrend.
Yes, of this downtrend, this downtrend, this whole downtrend.
Hello.
Hey, um, hey, are you there?
Yeah, I'm still there. Are you there?
Yeah. This happens very
It
often.
just.
It usually just shuts down for a second, then comes back up. That's how Zoom is.
Oh, no worries.
Yeah.
Okay.
So I was saying that what we can expect for next for this pair is to come
Yeah.
and test the last highs that were broken to invalidate this trend. Okay. And if we look to the left,
Hello.
hey, can you see my screen?
Oh yes. Okay. Now it works. Cool.
Yeah. So now, since we have invalidated this trend, now we can eventually expect price to come back to test the last highs and lows which were broken to form this downtrend. Okay. And as we know that if we looking at this previous uptrend, okay,
Yeah.
if we have an uptrend like that, to break below, that means we invalidate, to invalidate this uptrend, we break below these previous highs and lows, right?
Yeah.
Yeah. So that means that a pullback such as this, I mean, a shift in direction such as this, we expect it to come all the way to these previous highs, as I was just explaining to you moments ago.
Okay.
Yeah. So these highs now look translating into GBP USD. We see that the last highs and lows are here.
Yeah,
Okay.
that's exactly where I was seeing it as well.
Perfect. So that means that we can end of the day expect price to rally all the way back to testing this invalidation this invalidation point there essentially. Okay.
Okay.
Yeah, that means we are expecting to test this invalidation point. So this is the monthly perspective, but essentially the system is the same on the weekly time frame, on the daily, and on the 4 hour, even on the 1 hour and 30 minutes as well.
Okay.
Okay. Yeah, that means you can swing trade on this, and you can day trade on that, and you can scalp as well by following the very same principles.
Got it.
Okay. Yeah. So that is the first idea. But also now, since we know that we have broken, so now we are bullish. Okay. That means we are
Yeah.
only looking to take buy trades on this pair.
On GBP USD.
Yes, we are bullish. Now the idea is that we are, since we are expecting to eventually uh, since we are expecting to eventually tap this invalidation point, we have now shifted. So that means we don't expect to break back into the bearish territory. Okay.
So using the last lower high and lower low that was broken, that now becomes the we need to retest that previous invalidation point to continue going up.
Absolutely.
Okay.
Absolutely. Yeah. So that means that these last lows now
Yeah.
become our monthly invalidation point. Okay.
Very clear. Yeah.
Yeah. Yeah. So that means that price can pull back all the way to test this monthly
Yeah.
invalidation point, to test this monthly invalidation point before eventually proceeding bullish. Okay, so that means we can pull back all the way to this monthly invalidation point before
Yeah.
eventually continuing with our bullish bias,
Uptrend.
anticipating to test the invalidation point.
And I have a little question
Yeah, sure.
regarding that.
Mhm.
So you said that we can know if it's gonna break or bounce if we look on the higher time frame. So now we're looking at
Exactly.
the highest time frame available, which is the monthly.
Yeah.
So that invalidation point at 1.35, we're gonna be approaching that point while being on the uptrend.
Uh-huh.
So how do we know
How do
if
we
it breaks
know?
or bounce with fundamentals or
No, beautiful. That's a very beautiful question, actually. We're
okay
going to know that we are. I am expecting that we are going to bounce back to the downside. Okay.
okay
Yeah. And why? Because if we look at these previous lows, okay,
yeah
these previous lows, when we eventually came to, okay, we got here, then we started
yeah
pulling back, but we didn't invalidate the overall downtrend of the PUSD. That means that in the all-time sense, so to speak, we are still bearish on this pair. Why are we bearish? Because
oh
we haven't broken these previous highs and lows. Okay. Yeah. So this
okay
was the previous lower low. This was the previous lower
yeah
high. All right. So we
right
didn't break that, but what we can see, what we can see is that when we got to this point, this last point, all right, we did make
yeah
a push to the upside, all right? And that
mm-hmm.
means that when we eventually came back down, we didn't bounce, okay?
It went past
Yes, we went past, we broke below it. That means we
okay
are expecting to eventually get bearish continuation on this pair, okay?
okay
Now, the fact that we are anticipating to get a bearish continuation, that means that we cannot invalidate this bias. We cannot invalidate this trend. Okay.
okay
Yeah, because we broke structure. If we had rejected, if we had gotten a wick and closed above, that now means that we would be expecting for us to break when we get to this point and eventually continue all the way to the upside to test these highs.
And test the high. Okay.
Exactly, to
All
test
right.
these previous highs. So that is the notion behind. So that is how we know that we are anticipating to get to this invalidation point. However, we are not expecting to break above it.
To break.
Okay.
Got it.
I mean,
Yep.
and when I say to break, I mean to get a monthly closure, a monthly candle closing above it. Okay. When it's within the month, when it's within the month, we can see price wicking above it. We can see price going all the way above, but eventually we're expecting price to come back and
Okay.
and close below it.
So, if I understand, like since the higher time frame dictates the lower ones in daily we might see it break that level and continue pushing up, but on monthly at the end of the month it needs to close below to really confirm.
Exactly. That means that in the lower time frames we can go above it, but we eventually expect price to come back and close below it.
Got it.
Yeah.
Uh,
And how do we know, like how do we know how far it's going to go? That is going to depend on the price action on the lower time frames, like on the weekly and the daily. But usually we don't usually go three time frames higher.
Wait,
Okay.
sorry. Usually we don't go 3 time frames.
I mean three time frames lower. So if we are expecting to get a monthly closure, rejecting this monthly validation,
Yeah.
then then price can go all the way to the monthly, weekly, and the daily, and the validation on the daily time frame.
Okay.
Yeah, before continuing with our daily bias. But then that also depends on the price action or on the trend on the lower time frames, if it is the weekly or daily. Okay.
Okay.
So yeah, we have that in the back of our mind. So we know that since it is the monthly level that we are looking at, that means we don't expect to go all the way above the daily invalidation point, whatever that will be.
Okay.
Yeah. So that is
Understood.
understood.
Yeah.
Yeah. Okay. So let's look at more of your charts.
Yeah.
This is pound US, I mean euro US dollar. Okay,
Yeah.
so for us, in order to, yeah, okay, so you had an impulse, followed by a liquidation, followed by
Yeah.
another impulse. This is all of this essentially is correct. Okay.
Okay.
Yeah. So when we got this impulse, now
Yeah.
you had a question here. Question
Yeah.
of,
Like.
like, is it a consolidation or reversal? So this depends on the on the on the weekly time frame at this level. Like if the weekly was bearish, okay, then that
Mm-hmm.
means that you would be looking for sales essentially, maybe at the daily of or 4 hour invalidation. Okay, because now we're talking
Okay.
about the weekly, so that means you still count three time frames lower. So weekly, daily, and 4 hour.
Okay.
Okay, so three time frames lower. Like if it is between, for example, if it is the first week of the month, okay,
Mm-hmm.
and the weekly has rejected a weekly level, that means that a pullback cannot go above the weekly, daily, and the 4 hour.
Okay.
Yeah. This might seem very confusing at first, but you're going to get the hang of it with more examples, and the more practice you make, and it's going to become very crystal clear with time.
Excellent. So, from what I'm understanding about the 3 time frames lower is if we have a weekly invalidation point, we can look at we can look at weekly, daily, and 4 hour.
Exactly, yes. Yes, that means that you go to the 4 hour trend and look for the invalidation point.
Got it. Okay. Yeah, it makes sense.
Yeah.
Makes sense. Okay.
Yes. So essentially that is the way that it works. Do you have any questions up to there so far?
So far, it's only well, if we continue looking at Euro USD, for
Uh-huh.
example, so there was the consolidation
Oh,
reversal. So that
uh-huh.
if we look on the weekly, it was
Okay. Uh-huh. USD.
I'm gonna be looking at my chart at the same time on a different screen so we can see at the same time.
No, listen. The look for an option that says annotate on the
On
Zoom. Yes, on Zoom.
Okay, let me check view options, annotate.
Yeah,
Okay.
yeah.
Oh, I have
That
it.
yes. So activating that gives you
Oh, I can
the
draw on my
possibility to
screen.
exactly to draw on my screen. Yeah.
Oh, wow. Okay, perfect. Okay. So we if we look what I see from what I've learned from the series, the
Uh-huh.
trend and the channels so far. Can I draw? Is it okay?
Yes, yes, yes. You can draw.
Okay. So what I see is that we have an invalidation point here from this.
Aha, yes, perfect, perfect. Actually, yeah, this is one of the things that I saw on your chart that I wanted to rectify. Okay.
Okay, yeah,
Yeah, so the invalidation, um, okay, so this was your invalidation, right?
yeah.
Yeah, well, this last highs cannot be the invalidation. The invalidation has to be the previous lows. Okay.
Okay, so it
Yeah,
has to be
because we
the
talked
low.
about yes, the low in the case of a in the case of a bullish trend like this. Okay, let me try to redraw it again so that I can make it clear for you. Okay, so if we break above, okay,
Yeah.
a pullback cannot exceed these previous lows if we are on a bull trend. Okay, so it becomes the previous lows. Okay,
Oh,
yeah, and if
and that's the highway I'll clear. Take care.
yeah, so
Okay.
because this now becomes the inverse and this becomes the very last point of invalidation that we can touch that would still validate this as a bull trend.
Okay. Oh, right.
Yeah,
Mm-hmm.
yeah. And similarly to if we had a bullish trend, okay, then we
Yeah.
broke below it, then it becomes the last high. Okay,
The last
so
high.
that means
So it's
pullback
not
cannot
the okay.
exceed the last highs. Yeah.
So bullish is last high and bearish is last low.
Yeah. Essentially the last low before the structural retest, before the main structural retest low.
Okay, so in that case, then if we look to the left, if it's the last low before structural retest, so we have we have the huge move down.
Uh, the huge move down that broke this structure.
Yeah, so essentially it would have to be the last low. It's either I'm looking at either here, but I think it would be this one, right?
Which one do you think? This one or this?
it wait, I think
What
it
was
would be
it?
this one here.
Exactly. Yes, absolutely.
Okay.
Absolutely. That is
I'll,
absolutely correct. Yeah, that is absolutely correct. Okay. So we are expecting price to eventually come and test these last lows. Okay.
okay.
Yeah. But this is not going to be a 1 day or 1 week journey. This is the monthly time frame we're talking about. Okay.
Yeah, it takes months.
Yeah, it's going and it could take 1 month as well, because we don't know what's going to happen, because we have a move like this that happens in just a few months. Okay.
Yeah, that was strong push.
Yeah, so something can happen, something can crash, maybe the trade wars or something, and all of a sudden dollar, I mean the euro crashes and you see price just dropping all the way down in a month, or in 2 weeks or in a week. So there is no way to know for sure that when it's gonna get here. What we do know that it's
Yeah.
gonna get there eventually.
Okay.
Okay,
And it's
and
gonna get there before it can go back up, right?
absolutely yes, it's gonna get there
Okay.
before it can go back up. Yeah.
And little question about, so this is our last low because this was because this here is considered the structural retest,
Yeah.
but we can see that it went lower.
Went lower. How can you explain
Yeah,
it
well,
further?
because we have our last low here,
Uh-huh.
but the price came back and
And when
like it didn't tap and immediately go back up. Like it on the monthly, it closed below.
oh, okay, okay, yeah,
This
I do understand your question. I understand
okay,
your question, and
yeah,
that will have to do with now the overall all-time price movement.
okay,
Yeah, that will have to do with the overall price movement. Like, in order to understand that, we would have to do an analysis of what Euro USD has been doing
yeah,
for since its inception, basically since the beginning. Okay, and
okay,
just to maybe if I can if I can go through it very fast. Okay,
yeah,
what we see with Euro USD is that the very first thing that comes into our eyes, or into my eyes for that matter, is this phase. Okay,
mm-hmm,
okay. So this phase is a phase of liquidation. Okay, as we know that a trend has three phases. So we have an impulse followed by a liquidation, which is
yeah,
always in the opposite direction. Okay,
from the
and
trend.
yeah,
Yeah,
yeah, and that is how we know that this is the liquidation phase. Then followed by a continuation.
okay,
Okay, if I go too fast, just let me know. All right.
okay,
Yeah. So basically, what we are looking at here is that, first of all, we have this liquidation phase, okay, then followed
yeah,
by a continuation to the upside. That means that
okay,
if we had more data way before July 1993, we would
yeah,
have seen that we did in fact have a bullish
an
move.
impulse.
Yes, we did in fact have an impulse that was followed by a liquidation, then proceeded by a continuation that we are seeing to the upside. Now, this makes
Yeah,
this the whole entire thing like a trend or a channel, so to say.
a channel.
Okay. So after that, what we do expect is, because we have broken now we did break the previous highs and lows. Okay,
Yeah,
yeah, we do have highs and lows over here that we did break. Okay, and we do have a structure here that we did break as well. So that means that there is a potential possibility for us to eventually come all the way back down to at least these levels, to at least these levels, and even way to the bottom. Okay.
Okay.
Yeah. But now what you need to understand
Since
is, what you need to understand is that this is not something that you necessarily want to consider very much, because this is guaranteed to take a really long time. I mean, just starting from where we are, from from uh, from where price started. This was 1993. We are now
yeah, that's a long time.
in 2018. So it's a really really long time, and
Yeah.
we are not we are not investors essentially. So
No,
yeah,
no, exactly, exactly.
yeah, you wouldn't want to take a trade that would last 10, 20 years, 15 years. Yeah. You want to be able to take a
Okay.
trade that would last maybe a week, a month, or even 2 months. Okay.
Okay.
Yeah. So basically then we started getting a pullback. Okay. We got a pullback. So that means that we are eventually expecting price to go all the way back down. That means that every level can be broken.
All right.
Yeah, every level can be broken, but we are going to concern ourselves with more of the medium to short-term price action. And by medium, I mean the last maybe 2, 3 to 5 years. Okay.
Okay.
Yeah. And when I say short-term, I mean maybe the last year or 2 year to the last few months. Now that is when we can talk about the monthly time frame and the weekly.
Okay.
Yeah, because for and I was saying to you the other day that you are working and you have a hobby and a passion of traveling, so
Yeah.
you don't want to pursue that kind of trading that would make you to want to always be on the charts. You want to essentially be able to take a trade, a swing trade that can last for at least 3 days, 4 days, okay, even a week. And
Yeah.
if you're on transit, for example, when you eventually come to Zanzibar, that means you could take a trade in Canada and expect your target to be hit in the next 2 or 3 weeks. That means that if you're expecting to come here and stay for a week and a half, you wouldn't even you wouldn't even need to look at the charts that whole time that you're here. You can just just peep at it just a moment, but not being there analyzing all the time.
That's essentially the goal. That's the
Yes.
very that's the goal that I
Yeah.
yeah.
Exactly. So that is, yeah. So that is that. So with Euro USD, so we are expecting price in the medium term to come and test at least these lows. Okay.
Okay.
Yeah. And what does that mean for us? That means that we do not expect to invalidate this bearish trend until we get to this point, right?
Yeah, exactly.
Yeah. And we know that to invalidate a trend, to invalidate a trend, we will have to break below the previous highs and lows. Okay.
Yeah.
Yes, that means that this is a previous lower low over
Here
here, and
and lower high here.
yes, absolutely.
Good.
Exactly. So that means that price can pull back all the way and test these highs and
Yeah.
still be bearish. Okay. Okay. So that means that in the medium term, we can in fact pull all the way back to these highs.
So we can still go up. Okay.
Yeah.
Without I
Uh-huh.
feel like this is very I feel like this is very basic at first,
Mhm.
yet so crucial to understanding how the markets work actually.
Yes, exactly, and that is exactly the whole entire idea, and that is what most people don't understand. Okay, so
Yeah.
now someone can tell you that maybe on the daily or the 4 hour, that maybe we are approaching um, support or resistance. But you have to know on the higher time frames what it's telling you. Like if we are bearish on the monthly or weekly, for example, if we are at this monthly invalidation, okay,
Yeah.
and price pulls back and you find a support on the 1 hour, you can buy on that 1 hour support, but eventually you're going to be destroyed because the monthly we are at validation
It's
and we
a monthly. It's a resistance. So
yes, yeah, exactly. It's a monthly resistance and eventually it's going to go back down.
okay.
Yeah, so this is the whole new way of trading that you essentially have to get accustomed to, and you have to forget about everything else. I can show you
Yeah.
a ton of examples of where bullish engulfings and bearish engulfings and all the the candlestick patterns don't work. Okay, and
Yeah.
I'm sure you may have seen that so many times as well.
Yeah, I have.
Yeah, for example, if
But
we look. Mhm.
just like right now, the last monthly candle on Euro USD was a huge bullish engulfing. But as soon as this month of November opened, it went up a bit and just started going
Started
down.
going down, exactly, yeah.
Yeah.
Or for example, if we look at okay, let's do this. um we put it on replay to there. Okay, if we look at this, okay, so you see
Yeah.
that we 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 did make a new low, okay, then we made a new high, then we made a new low, okay. So someone would see this as a head and shoulders pattern.
Right.
Yeah. So someone, are you familiar with, have you heard about that head and shoulders pattern?
I've seen yeah, I've seen there's head and shoulders, there's wedges,
Yeah.
there's
Yeah.
all
So,
sorts of patterns.
uh,
Yeah.
so the regular people
Yeah.
would be anticipating to look for a buy at this area because now
Okay.
they are anticipating that we are going to eventually get a continuation to the upside because okay, now we have tapped and rejected this right shoulder, so now we're looking
Yeah.
to buy. Okay.
Yeah.
Yeah. But yeah, but what happens next is that we tap, we get a little pullback and
Mm.
eventually continue to the downside.
So if I understand like the mechanics of what happened, the pattern itself gave liquidity to the sellers because everybody was buying the inverted head and shoulders.
Aha, exactly. So that means
Yeah.
that everybody was trying to push, and this is the monthly time frame, remember? So everybody
Yeah.
was trying to push price up, okay?
Yeah.
Yeah, but eventually price went back down.
Went down.
Yeah.
Got it.
So
Got it.
yeah, so all the patterns and everything else, like I'm not saying that they don't completely work, but
Yeah.
it can work just once or twice, and you can get it right when it aligns with the trend direction. Okay,
Mm-hmm.
but most of the time it's not going to work. It's just going to end up hurting you, and that is part of the reason why 90% of people actually fail, because
Fail.
yeah, because everybody who gets into forex, they are essentially getting access to the same materials that the same people who are losing are are using essentially. Okay,
Got it.
yeah, so like if somebody wanted to get into forex, like they would start looking at downloading books and reading materials online, and all the materials and all the websites will tell you about the bullish engulfing and stuff like that and support and resistance. Okay, so that means that people are doomed to fail, and many people end up not doing so well because they get exposed to the same materials and the cycle continues and continues and continues. Okay, so
Yeah.
essentially, what happened to me personally, I was in that cycle for a really, really long time as well. But
Okay.
then, okay, it got to a time and I was like, yo, there has to be something else that actually works. Yeah, so I said, okay, I'm not going to be looking to make cash from forex. I'm just going to analyze this market and look at what really happens. Okay,
Mm-hmm.
yeah, so that is when I get familiar with the concept of the trend that despite the whole idea of supporting resistance and stuff, but everybody was saying that the trend is your best friend. And I was
Yeah.
like, what is this trend? What is a
Yeah.
trend really? What is a trend made of? Okay. So then with lots of research and try and error, and that is how I finally came to this way of trading that I'm doing right now.
I mean, it's very mind blowing. It's your the accuracy is insane. You know, just
Yes, absolutely. And the way it works, like if you really settle down and practice enough, you will be getting those trades which essentially have no drawdown. Okay, like you
yeah,
enter on the week, and the other thing about those week entries, like people are very hyped up about the week entries. Like, yo, look at that trade. It's
yeah,
exactly at the week, but many people are usually just taking a very high risk, selling at their so-called resistances, and sometimes they get it right,
yeah.
and it becomes a weak entry kind of trade, and they get excited about it. But really, if you for example, if you do your analysis well and you enter at the invalidation point, that means that you're taking your entry at exactly where price is reversing. Okay, so it
Yeah,
has to be a weak entry. So it is something that is a no-brainer essentially. Okay, it's
yeah.
something that, yeah, that is a no-brainer. You can essentially use 2 or 3 pips or 5 pips stop loss. Okay,
That's
like that's the way it is. So it's I think it's very interesting, and until this day it interests me every single day.
I mean, having small risk for high rewards is the goal. I mean,
Uh, absolutely.
uh,
That
just
is the goal.
a small point on that matter. I um I remember that you posted a story on Instagram. You were watching Patrick Bet David with interview Ray Dalio,
Yeah, yes.
and Ray Dalio said that he was looking across non uh, how did he say it? But you posted a story basically yesterday saying that you can trade pairs that are not correlated,
Aha,
and
yes,
so you
diversification.
maximize return with the same amount of risk, or you
Yeah,
reduce the amount of risk. And
yes, exactly.
I made the connection that that Ray Dalio had said that as well, and it
E-
makes so much sense.
Exactly. Actually, I had that idea that if you
Yeah,
diversify, but then I came to watch the that video, and it
yeah.
sort of cemented the entire idea. And I was like, really, how can you apply that into trading? Okay.
Mm-hmm.
Yeah. So essentially, into trading, like for example, if you're risking $100 per trade, okay,
Yeah.
if I mean if you are accustomed to risking $100 per trade, what you can do is that instead of risking it all on one trade, that is GBP USD, for example,
Mm-hmm.
you can risk $50 on GBP USD and $50 on another pair that doesn't correlate. That doesn't correlate. For example, New Zealand card. Okay,
Yeah.
yeah. So what that gives you, end of the day, is that your risk is essentially the same $100. Okay,
Right.
if GBP USD doesn't play out, you're going to lose only $50. But
$50.
and if card plays out, that means you have an upside. Okay.
Ah,
Yeah. So
that's
that means
beautiful.
yeah, it's phenomenal that end of the day you always have an edge. You always have a win a winning advantage by using the very same amount of risk and increasing your potential return.
Got it.
Okay. Yeah,
That's
that's
yeah.
absolutely beautiful. But again, I want to tell you that you can get to play with all those stuff like diversification and compounding and stuff like that. But first of all, you really need to know the basics. Like
The
once,
basics exactly.
yeah, like once you have really known how to trade our system, and how everything works, there is enormous potential for you to trade and make money however you want to do it. Like you can flip it all the way you want to, but as long as you know the basics first.
Yeah, that's the whole point of the invalidation points and the trading with the trend and the channels. Do you mind if we go over a few other examples?
Yeah, sure. Yeah, sure, absolutely. Yes.
Um, can 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 we look at? I remember I sent you the chart for gold.
Gold, really? Did you send gold? Let me.
Yeah,
I didn't see
it was
that.
the first one.
It was the first one. Okay, let me.
Yeah, the first chart that I had sent.
Uh,
Wait, if you continue going up.
oh, it
Uh,
was before. It was before this.
yeah, exactly. It was the right.
Okay, yeah,
Yeah,
right. This one right here.
perfect.
Oh, okay. Okay, let's have a look at gold.
So
Uh,
basically, if I look at gold, my invalidation point at the bottom is it would have to be the low.
at 1200.
Yeah, was that one correct?
Ah, okay.
Or it's here?
No. It's not. It's not. Unfortunately, let's go to the charts.
Yeah.
Let's go to the charts and look at gold weekly. Yeah. So gold weekly. The invalidation of this weekly trend. Okay. So now after today's lesson, tell me where do you think it's going to be?
The invalidation point
Yeah, the invalidation point.
for the whole move.
Yeah, for this whole
I
entire move.
look. uh, you're gonna correct me if I'm wrong, but
Yeah,
from where I see it now, the invalidation point would be here.
absolutely.
Yeah. Yeah.
Wow,
Cool.
you're like catching up really fast, and I'm
That's
enjoying that, man. Like you should keep
awesome.
up.
Well, you're a good teacher, so it's very clear when you explain. So that makes it very easy to catch on.
Oh wow, thanks. That's good to hear.
Okay,
Yeah.
perfect. So that would be our invalidation point for the whole bullish.
Yeah, for the whole bullish trend on the monthly. But now,
Yeah.
if we look at the weekly, because I think your chart was on the weekly,
Yeah. Exactly.
was a weekly time frame, it is still
Yeah.
going to be pretty much at the around the same area.
Yeah.
Yeah, because when you look at it, there is usually not very much difference between the monthly and the weekly time frame. Same
Okay.
way, yeah, the same way you would look at the 1 hour and 30 minutes time frame. Elliot, I have to
Okay.
take this call. Can you give me like 2 minutes?
Yeah. Yeah. No worries.
Hello. Sì, vedi. Wow, when you scratch it. Wewe unafungua.